Which is the better Cathie Wood stock to buy, Tesla or Shopify? These two are major holdings in Cathie Wood's ARK Innovation ETF portfolio. Cathie Wood is a popular investment manager that is attractive to innovative growth stocks, and Tesla and Shopify are certainly innovative growth stocks. So, what we can understand why Cathie Wood is attracted to these. So, let's start with looking at their price difference in 2022. Tesla stock was down 65%, where Shopify stock was down 74.8%. And growth stocks overall had a challenging year in 2022. Many of them were falling significant percentages, like Tesla and Shopify. Let's look at their quarterly revenue growth. And in this metric, Shopify was ahead in a few quarters in 2020 and 2021. And then as 2021 matured and 2022 started, Tesla took the lead over Shopify, mainly because consumers were eager to get out of the house and spend money on away from home experiences, whereas Shopify benefits when folks are spending money online. This difference gave the benefit to Tesla, which also benefited from the fact that legacy automakers were having difficulty ramping up car production, and so prices of legacy cars, internal combustion engine cars, were soaring. Companies were charging $10,000 over MSRP for $25,000 cars, and so people were saying, "Hey, if I'm going to pay this much price for a Honda Accord or a Honda Civic, why not pay a little bit more and get a Tesla Model 3 or a Tesla Model Y, and in that, get an electric vehicle, save money on gas, help the environment?" And so Tesla benefited from that trend. Next, I want to look at the operating profit margin for the trailing 12 months. And you see a major change in direction here. Tesla was moving upward and continued to move upward, reaching 16.7% operating profit margin, and impressive growth in terms of this metric for Tesla. Meanwhile, Shopify went in the opposite direction, for two reasons. One, I mentioned earlier, the changing consumer habits, where they wanted to unleash pent up demand for away from home spending. And number two, Shopify is making a major investment in its logistical capabilities, acquiring a company for $2 billion and ramping up its own fulfillment offerings in an effort to give more services to its merchants on the platform, and this is causing its operating profit margin to fall. Next, I wanted to look at cash flow from operations. And again, the story continues with Tesla showing growth in its cash flow from operations, and Shopify moving in the opposite direction here, decreasing in its cash flow from operations. And what's emerging here is this difference between the direction they're going, Shopify and Tesla. But what I'm seeing in the data suggests that this might reverse, or this dichotomy might reverse, because Shopify recently raised prices on its services. So that's going to cause profits and cash flows to increase for Shopify, so long as customers don't cancel their plans, which I don't suspect they would, because it was a modest price increase. And if you've already got all your website, your data, everything going on Shopify's platform, you're not going to cancel and switch for just $2 or $3 or $5 or $10 difference per month. And then on the flip side, Tesla has recently decreased prices on its cars, and so that's going to cause profit margins to decline, unless, of course, the customer sales jumps high enough to make up for the fact that they're selling at lower prices. So going forward, they're heading, the 2022 was a certain direction, and I think 2023 is going to change course again. And another reason is that the difference in competition. Shopify is operating in the e-commerce industry, where competitors like Amazon, eBay, and Etsy, and Shopify itself are all raising prices on merchants. And so the degree of competition is decreasing in that industry. And then Tesla is operating in an opposite industry environment where legacy car manufacturers, new electric vehicle manufacturers are all ramping up production and are all trying to take market share. And so competition in that industry is growing fiercely more competitive in 2020. It started in earlier, and it's going to just grow fiercer in 2023. So in terms of competition, they're going in the opposite direction. Finally, I wanted to look at total assets, and looking at Tesla at 62 billion in total assets compared to Shopify's 13 billion in total assets. This just highlights the difference in industry. Tesla's in car manufacturing, which is heavily capital intensive. This is the primary reason why I often say on my channel I don't like to invest in car manufacturing stocks, because it's so expensive to ramp up production. It's so expensive to continue in the business. Every year you got to ramp up new models, building up inventory, ramping up production without knowing if customers are going to like this new model or not. And if you want to grow, if you want to take market share and grow, you've got to build more manufacturing facilities, expand your facilities. That's all billions and billions and billions of dollars, and that's risky from an investor's viewpoint. And that's one reason why I've become a little bit disenchanted with Shopify stock as well, because of its expensive foray into expanding its logistical capabilities. I much preferred if Shopify didn't expand into fulfillment, did not spend the billions of dollars trying to expand those capabilities. It's a little soon to say whether those investments will be effective or not. I would just have preferred them not undertake those investments. And finally, let's look at valuation. Tesla is trading at a price to sales of 4.69. Shopify trading at a price to sales forward of 9.093. And so, to answer the question, which Cathie Wood stock is the better buy, Shopify or Tesla? This one was a really, really close call, mainly because the two main reasons. Number one, Tesla is operating in a fiercely competitive industry right now, and I think competition is going to get worse. Shopify is in the opposite, where competition is getting easier. I shouldn't say easier, where competition is getting less intense. And then, secondly, the billions of dollars in investments from Shopify into fulfillment logistics caused me to kind of downgrade the stock a little bit in my mind. I preferred Shopify as an asset light business model. So it kind of brought the two closer together. But still, I'm going to say Shopify is the better stock to buy. Longer term, I think Shopify's profit prospects are stronger than Tesla's. All right, so there you have it. That's my answer for which one is the better Cathie Wood stock to buy. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.